Okay, I'll accept $1,000 a month. That's reasonable. It's a hefty sum of money. But the best part is that you don't have to put out any extra effort for it. Every month, you receive a sum of money into your bank accounts. That's what dividend investing is all about. It's known as passive income, income derived without the need to work. Now, what I want to do in this video is go over how do we achieve this goal? How do we achieve $1,000 a month in passive income through dividends?
Welcome to Financial Market TV. If you're new to the channel and enjoy content like this, hit that subscribe button and the notification bell. Also, please don't hesitate to share your comments down below and give this video a like. Let's get started.
So, what is dividend investing? You might be thinking, what is it really? Well, here's a short spiel on the magic of compound interest. For example, you don't have to aim for $1,000 a month right away. No, you begin modestly. You begin by rolling a small snowball that fits your head, and as you push it down the hill and gain momentum, it grows simpler and bigger. And so it's a massive snowball that can't be stopped. You're right, it's all about trading up, and you start with a small account, such as one share or $2 per month, then build from there. You can use that money to buy more shares, which makes it easier and bigger over time. So, how is this achieved? Let's go over the basics. Tip number one, the forward dividend and payout ratio. This is the amount in dividends that you receive yearly. In this case, $5. I know that doesn't seem like much, but don't forget the principle that I told you earlier on compound interest does amazing things. All you have to do is get that snowball effect rolling. Let's take McDonald's for example. So the forward dividend is $5. That gives McDonald's a 2.3% dividend yield, which isn't too bad in today's market. The next thing to consider is their earnings. It's currently at $6.33, as you can see. This indicates that McDonald's makes $6.33 per share every year and pays out $5 of it in dividends, leaving a profit of $1.33 used to reinvest in the business. You must now ensure that the profits are consistently greater than the dividend payouts. You don't want to pay more than they make, since doing so would put a strain on their balance sheets and savings. Number two, look at the company's track record for dividends. Before making a purchase, always look at the company's dividend history. On the other side, you generally want to have stock with dividends that you may look back over time and see higher payouts. So it's not terrible when you look at McDonald's, since they've raised dividends by a substantial amount in the last 12 years, from $114 to $495. So make sure to always have a look at their dividend history and how reliable it is. Number three, look at the quality of the company. The second stage is something that I frequently observe dividend investors overlook. Try to reflect how the company is going to as far as 10 years' time. Is their business model sustainable? Are they losing or winning against competitors? You don't want any average or safe company, generally speaking. You want those at the top. As Warren Buffett says, buy companies with a strong competitive advantage. Number four, start small. You don't need insane amounts of money to start dividend investing. You can start with smaller stocks like Bank of America, which is only $25, or even Coca-Cola at $50. There are a variety of stocks that are much cheaper to start with, after which you may expand your portfolio. But the one thing you must have is a habit of investing your money instead of squandering it on stupid things. Number five, change your habits. Consider how much money you'd save if you didn't buy your daily coffee at Starbucks and make yourself a cup at home instead. Consider how much money you'd have for investing it if you stopped buying useless things on Amazon or getting that pumpkin spice latte. If you consider it, there's a lot of extra cash that might be invested right away in dividend shares. If you want to earn $1,000 a month in dividends, you must modify your habits. Instead of thinking, I'm so excited to spend this money because it's my first paycheck, I can't wait to invest it and buy more Disney shares or Pepsi. Think about whether I should put it in the bank. The normal person receives some sort of limited pleasure, but the investor over time achieves objectives like $1,000 a month. Now I'll show you some dividend stocks that are a great place to start. 3M. 3M is a stock that pays a nice dividend yield, 3.5%. And the thing about 3M is they've increased their annual dividend in more than 61 consecutive years in a row. So it's fair to say that they're different and reliable. Currently, 3M sells for around $170 per share with a market cap of almost 100 billion. The firm can be used to highlight your portfolio to a variety of sectors including US healthcare, consumer goods, and industrial safety. Or it creates over 60,000 distinct items under many brands. PepsiCo, a very well known company with a dividend yield of 3%, and they've increased their dividends for 48 consecutive years, making it very trustworthy. They operate under the consumer staple sector, most known as Pepsi, but they also have Gatorade, Doritos, Cheetos, Lay's, and Mountain Dew under their belt. So these are just some example stocks that you may want to start with when getting started in dividend investing. Of course, before you invest in anything, you must first have a thorough knowledge of the business. So the last question remains, how much do we need invested in total to get this? Well, you have to put in the work and the time. So let me show you the answer to the question of how much you need to invest to get $1,000 a month. So let's assume that our typical dividend yield is around 3% each year. That implies that if we invest 100,000, we will receive 3,000 in dividends every year. Think of the snowball effect when you initially start that snowball. It's super tiny, but once the ball is rolling, it ends up getting very big, and that's what can happen to you. Just make sure to do your research, change your habits, and start when you can.
Thanks for watching the whole video. Again, if you're new and like this type of content, subscribe to our channel. And don't forget to leave a comment down below and hit that like button. Also, click on the notification bell to get updated on our weekly uploads. See you in the next video.